The first week of July has undoubtedly been one of the busiest this year, with numerous significant events, both economic and political. Firstly, the Central Bankers Forum in Portugal allows markets to form their opinions on the near and distant prospects of interest rate movements. Secondly, elections in France and the United Kingdom add to the already tense start of the second half of 2024. The question, will populism prevail, is crucial for the economy. While the UK is likely to avoid this on July 4, the second round in France poses significant risks for the markets, particularly for the euro. However, even before that, on Friday, the US dollar might be in trouble as the US releases data that could instantly shift the Fed Reserve's policy. However, let us discuss things in order. Here are macroeconomic reports that you should pay attention to on Thursday and Friday, July 4 and 5. You're watching the Traders Calendar. To start Thursday, the markets will learn about the Australian trade balance report. The trade balance is expected to remain in surplus and increase to 6.7 billion Australian dollars. Remember, a surplus, unlike a deficit, means that sales exceed purchases. However, last month, Australia's economy saw a decline in both exports and imports. The biggest losses were in exports to China, Australia's largest market. Compared to a nine-fold jump in March, April's shipments dropped sharply to 4.2%. The decline in demand from the world's second-largest economy and Australia's main trading partner negatively affects antibody currencies. Thus, even if the forecast is confirmed, the Australian dollar might react with a decline. The euro may show a similar reaction amid the publication of Germany's factory orders data. The indicator is anticipated to climb by 0.5%, and this is an optimistic forecast, considering that this year the indicator has not yet moved out of negative territory. Therefore, if it turns positive, the euro will gain in value. However, market nervousness ahead of the publication of key reports on Friday and the French election results are likely to boost the safer US dollar. On a Friday, the euro might get support from the retail sales data from the Eurozone. On a monthly basis, the indicator may jump to at least plus 0.1% from a minus 0.5%. However, given that on an annual basis, it's stuck at zero, and this report is unlikely to generate much optimism for the euro. If predictions for non-farm payrolls are confirmed, the euro and other currencies in the US dollar basket are likely to benefit. This report is the main one for the US regulator, as it reflects not only the number of new jobs added by the US economy each month, but also the unemployment rate and wage growth. Therefore, if the non-farm payrolls figure falls to 160,000, the US dollar will also start to decline. Traders should also pay attention to the wage growth indicator, which directly affects inflation. Analysts suppose that the rise in wages will slacken to around 3.6%, even if this goes as planned. The indicator will still be far from the Fed Reserve's 2% target. In this light, the US dollar may gain in value, although it's difficult to predict asset movements at the moment. We know for sure that the markets will face high volatility during the publication of the data. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. We will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon!